This week is going to be critical for stocks. After Friday, we saw the NASDAQ coming down to the first critical level. Will stocks be able to hang on and run to new all-time highs? Or is the stock market rally over with? So one of the critical levels we were talking about for a little bit of time here was that the fact that the markets are likely going to retrace back down towards the 38% retracement. Now, with the NASDAQ, that comes in right here, right around 610 or so. And we can see on Friday, the low of the NASDAQ, the QQQs, was 611.36. Now, when we look at the fear and greed index, we are back into fear territory. Last week, we were able to get over to neutral territory and then bam, smacked right back. Now, we look at the most recent investor sentiment survey. We can see this week, the bulls did step up just a smidge little bit from 44.3 to 44.6. The bears also stepped down by 0.2 from 30.8 to 30.6. The neutral category also stepped down from 24.9 to 24.8. However, on Friday, the NASDAQ's like, you know what? It's all good. I am done going up. We come over and look at the volatility index. The VIX at one point was up drastically. However, the VIX only closed up 5.93%. We see this. We can see earlier on in the day, the VIX had a high of 17.86. And this is one of the things that I was warning traders about. As the volatility index gets down towards these lower levels, this is when the market is going to be prone for volatility shocks. And that's exactly what we saw out there on Friday. Now, it didn't help that last week we saw Oracle plummet 11% on revenue, pushing down AI stocks like Nvidia and CoreWeave. And if we look at Oracle real quick, it wasn't too long ago where Oracle had that big gap up after earnings only to give it up. This time, well, Oracle has that gap lower. Now, as we start looking at some of these stocks out here, notice we have a potential double bottom. Now, if that does fail, watch out. We're probably going to go substantially lower. Now, one thing that's helping the bulls out right here would be if we look down here at the MACD indicator, as we've came down to make the second low, we can see that the MACD indicator is nowhere close near making a lower low. And then if it wasn't bad enough with Oracle, Broadcom stocks reverses lower on a misinterpretation of what the CEO said on the earnings call. Well, if we look at AVGO on Friday, yikes, a big nasty down candle. AVGO down 11.43% with a nasty gap lower. And we were able to break below that swing point there. And if we look down here, we have another high volume node on the composite profile right around 345 or so. Now, if you're trading AVGO after hours when they had the earnings call, initially we had the spike up, kind of came up for a little double top pattern, and then oopsie doopsie, that was a misinterpretation, and we see the markets going down. Now, let me know in the comment section down below, do you guys think it was just a misinterpretation, or do you think Broadcom is going to have serious problems moving forward? Now, as we look at Broadcom going down this week, go over and take a look at Nvidia. Nvidia also starting to look very sick. In one of the charts I've been sharing for quite some time, we look at Nvidia on the monthly chart. Look, we had that bearish engulfing candle, and we zoom this out. This is a pretty vertical move. One of the areas I've been talking about for quite some time, at some point, Nvidia should come down towards this area, basically a structure breakout point, anywhere from 154.21 down here to 139.23. Now, if Nvidia does make it down there and then firms up, well, hey, all is good, and we can see the rally go ahead and continue. However, one of the problems we have with Nvidia and some of the AI stocks, there's such a high weighting of the indices out there. So when AI catches a cold, the rest of the market is catching a cold like we saw on Friday. Now, if we come over and look at the dollar index on the daily chart, we have top number one, top number two, we have broken the neckline. The target should be down here at 97.58. But, and this is going to be a big but, we come over and take a look at gold. Look at gold out there on Friday. At one point, gold was up, really threatening to make a new all-time high. I think it just barely missed it. And then we formed with a selling tail on top of that candle. We were also able to smash that ABC target. But notice the MACD indicator as we're coming up towards the prior all-time highs. The MACD indicator is nowhere near the levels where it was before when the market was up towards those all-time highs. Now, even though gold failed to make new all-time highs on Friday, does not necessarily mean we're not going to go higher. For instance, if we come over and look at the gamma exposure levels, look right up here. We have a lot of gamma exposure coming up right around the 4,400 strike price. And that is also a very nice round number. Now, if we do get above that, Then look, we have some more gamma exposure at 45.05. Now, if we do see gold running up that high, that is also going to signal we have problems in the market. Now, this week will be critical for a couple different reasons, but we most certainly want to keep an eye on the 10-year yield. Once again, where we at, we're right by that resistance level, and this could be setting up a potential A to B equals C to D pattern on the way up. This is also something we were talking about on the live stream on Friday, and that target would be all the way up here at about 4.34. And again, as yields go higher, that also is going to be problematic for the markets. Now, when we come over and we look at this week, what could actually influence some of this out here? Well, if we look, what do we have on the deck for the economic calendar? On Sunday night, we have no major economic news. On Monday, we have the Empire State Manufacturing. On Tuesday, this is where it starts to get dicey out here. We have the weekly ADP numbers coming out. We have the average hourly earnings. We have core retail sales. We have non-farm employment change, retail sales, and unemployment rate. And then at 9:45, flash manufacturing, flash services PMI. So Tuesday is going to be a high volatility day out there in the markets, or at least the potential for that. Now, if that wasn't bad enough, we scroll down here just a little bit more. And what do we see come Thursday? On Thursday, we get the CPI data coming out along with the weekly unemployment claims. So we have Tuesday, we have Thursday, and then on Thursday, we're not out of the woods either, because Thursday night going into Friday, the big thing that we're going to talk about here in a few moments is going to be the BOJ rate statement. I want to let you guys know there's only days left to take advantage of Apex's massive sale. All accounts, only $19.60 in special pricing for the activation fee. To take advantage of this offer, use the link in the description box down below. Use code Mike at checkout. So when we come over and look at the BOJ real quick, the Bank of Japan eyes a rate hike to the highest level since 1995. The Bank of Japan prepares to raise policy rate to 0.75%. Now, why could this potentially be important for us? Well, it's going to really boil down to this. If you look at the USD versus the JPY, this is what is called the yen carry trade. For so long, the yen has either been at negative rates, zero, or much lower than all other rates around the world. And they have what's called the yen carry trade. They borrow in yen and then buy higher yield assets like US treasuries. So keep in mind, so if the BOJ raises rates, it's going to cause traders to then have to go ahead, liquidate the position. And what does that mean? That means they will be selling treasuries. Well, if they sell treasuries, what do we think is going to go on with the 10-year yield? It's probably going to go all the way up here, completing the price patterns above us. Now, when we look at this chart right here, this is a chart I've been warning you guys about for weeks and weeks at this point. I said, watch out. If this chart starts to get vertical on the way up, that is also going to be a big warning sign out there. If you guys go back and remember earlier in the year, back in April, what happened when we were steeply moving up? We had the market absolutely screaming up. As the yield spreads between the 10-year and the 2-year, this is going to be a warning sign out here for stocks. However, we have some conflicting data out here, because if we look at the Dow Jones this week was able to make a new all-time high. That's going to be the chart on top. The chart on the bottom is going to be the transportation index. Look at how strong the transportation index was this week. So will the Dow be able to power the stocks up and go ahead and continue the rally on the way up? So if we look at the SPY versus HYG, SPY is going to be the chart on the top. HYG, which is high yield bonds, is a chart on the bottom. And notice, as we've had this consolidation up here on the SPY, look at the HYG. HYG has been making a series of lower highs. We could actually grab a trend line and basically just simply play connect the dots real quick. We can see that trend line is angling down. We grab it again, and we can also make the case that we are also still going down, looking at this little area right here. Now, this is going to be important. Who is telling the truth? Is it going to be the Dow Jones and the transportation index, or is it the SPY and the NASDAQ? Come over and look at Friday's price action. We can see all four of the indices were in the red, but then as we come over and look at advancing issues versus declining, we had 62.8% of issues declining on the day. Now, we come over and look at the sectors across the board on Friday. Notice we only had 3 sectors in the green. Now, 2 of them were barely in the green. Healthcare up 0.1. Consumer cyclicals up 0.1. Consumer defensives up 0.78. And it's really no surprise of the laggard out there. Technology absolutely getting destroyed. But then we come over and look at the 1 week performance, and it's a little bit more of a mixed bag. You can see technology was not the worst sector out there. It was one up from the bottom. And we also had financials very strong on the week. Now, if we go ahead and we take a look at a chart of financials real quick, we'll look at that via the XLF. XLF basically squeezing on up, and I believe XLF is making new all-time highs. XLF has never been at these levels, but on the monthly chart, notice as we're pushing to new all-time highs, draw your eyes right down here towards the MACD indicator. Is it making new highs? Absolutely not, at least at this point in time. And then on the daily chart, the MACD indicator does look strong at this moment. We have pushed above, but it isn't far-fetched to think financials are going to come under a little bit of pressure this week. We draw out this zone right here, prior all-time highs, candle wick to the candle body. We have broken out above it. We closed above it. We have failed to come back and test it. Now, to test this area would be a very minor pullback in the market. And then we compare that chart to the XLK real quick. Look at the technology sector. Here's a high, potentially lower high. Are we about to go all the way down, making a lower low? If we grab the Fibonacci extension tool and we measure A to B equals C to D, we get a price completion all the way down here at 129.85. However, we got to be mindful because we could also stop at one of these Fibonacci retracement levels, not validating that pattern down there. Keep in mind that ABC pattern down would only be valid if we break below the swing point at around 133.79. Right now, as of Friday, you can see we came down to a 38% retracement. But if we really start breaking below the 786 at about 137.05, that's when I'm going to start saying, we're going to probably go down towards this swing point here. And then from that point on, looking for the XLK to go down and complete that ABC pattern to the downside. Now we come over, look at the QQQs on the weekly chart, kind of a bearish engulfing looking candle. We have the MACD indicator also has a slight bearish cross as well. We do have a high volume zone right up here, anywhere from 602 down here to about 597. Keep in mind, I will not be surprised if we see the NASDAQ coming down towards, I'll say 521 or maybe even 529 or so, near these other high volume areas on the chart. If we were to grab a Fibonacci retracement, swing low all the way up here to the swing high on the weekly chart, the 38% retracement would be 547, but the 50% level would bring us towards those high volume areas that we were just speaking about moments ago. Now, when we look at this on the daily chart, notice just like the XLK, here's a high, here's a lower high, and we'll see how far this retracement gets underway. So far, we've come down just shy of the 38% retracement, but quite often we'll see the NASDAQ retrace 50 or even the 61.8 level. Now, it gets very interesting around the 61.8 because we also have a high volume node on the composite profile at about 598.30. If we can come down and break the 786, then we have a potential for an A to B equals C to D pattern on the way down. You see it measures something like that, and that gives us a price completion at 571.75. Now, we come over, look at the gamma exposure levels. Look right down here at 611 or so. We have a lot of gamma exposure, and then down below that, right around 600 or so would be the next area. Now, we come over, look at the gamma exposure level. You see we have a lot of gamma exposure right down here around 610. Below that would be right down here at about 600. And if we come over, look at the chart, where does 610 actually come into play? 610 was basically right there, just below that 38% retracement, and the 600 price point is just above the 61.8 Fibonacci level. And we'll see, do the dealers hedge? Can they get the market to bounce from that point on? Because if that's going to be the case, then we have the potential for an ABC pattern up. However, we break the 786, watch out, lights out, we are going substantially lower. We look over here on the 4-hour chart. What do we have going on? MACD indicator across to the downside. On the 30-minute chart, look, could this be a dreaded H pattern? On Friday, we had that gap lower. We failed to come back and fill the gap, but I do want to warn you guys, the MACD indicator is extremely low below the zero line, and we're trying to firm up. So even if on Monday we gap down a little bit, we take out that low, if we end up setting up some type of MACD divergence, could we get a little bit of a retracement up? Now, some of the areas I would want to watch would be right here, this minus development area, 418.37. If we look left, that's right near a structural breakdown point as well. Now, one thing I don't like about it is we've already come up for the test one time right here, so it's not as good, right? Remember, the first test is always going to be the best test. However, if we start breaking below this swing point, watch out, lights out, we are going substantially lower. Now, there is a candle that we also want to pay attention to. That big nasty down candle on the 30-minute chart. If we start getting above 50% of that candle, quite often we are going to undo that entire candle. Now, when we come over, look at the futures markets real quick. This could be critical. I have already rolled over my contracts. Keep in mind, this week, not only do we have NFP, CPI, the BOJ, but we also have triple witching come Friday, which means the futures contracts, it's time to roll them over this week. We'll talk about that on the live stream as we look at the volumes. But for this analysis video, I'm going to be using the March 2026 contract. Now you can see once we've already broken that swing point there, we were able to come down towards the high volume nodes. But look right below us, what is in our line of sight at this point in time? Right down here, we have an untested point of control, 25,191.75. Now, what's very interesting about this, if we grab a Fibonacci retracement from the swing low all the way up here to the swing high, notice where that comes in at. The 50% level is just below that point of control. In all reality, if the NASDAQ just comes down towards that area and rejects and goes back up, that could set up a massive ABC pattern up that could take the NASDAQ back to all-time highs. However, I want to warn you guys about something real quick. Look at where value area low is. Value area low is coming in at about 25,832.75. Now, what is the rule behind that? Whenever we close outside of value, this case, closing below value, we expect the next 1 to 2 sessions will come back and revisit that level. Now, one thing to note, since we're dealing with a weekly volume profile, one session would equal 1 week in time. So this could be either this week or next week, we possibly come back up and test that level. However, there's another area. If you're looking to play the aggressive move on the way back up and try to fill in some of this minus development area, there is another area I do like for potential targets. Candle wick right up here to the candle body. Now that zone comes in anywhere from 25,640 up here to about 25,670. Now, do we do something like this where the market just comes up here and then we reject back down, setting up a massive A to B equals C to D pattern on the way down? Now, we can't really see that at this moment until we see how far we go up and where that turn actually comes into play. And if we look right up here, notice we also have that minus development area we could come back and revisit, 25,673. Now, as I come on, look at the daily volume profiles real quick. We're gonna have the point of control down here at 25,470. Value area low at 25,371.5. Now, depending on how aggressive of a trader you are, you can look at this as below value area low. You're looking for the market to come back down and retest the lows from Friday. And then anything beyond that point, look for some of these other additional targets that we talked about to the downside, the untested point of control, and even that 50% Fibonacci retracement level. But in the event that we can get above the point of control and stay above it, we can look for the market to retest the swing point right up in here and then really try to play for that structure breakdown point retest. I'm going to use the candle wick over here, right up here to the candle bodies. And you can see we've already tested it once. And like I said earlier, the first test is always going to be the best test. Now, something else we're going to have to contend with this week. We do have a little bit of earnings coming out on Thursday. We're going to have FedEx. We have Nike coming out. And we look at the big expected movers out there. Micron expected to move plus or minus 11%. That's going to be Wednesday after the bell. Nike is going to be Thursday after the bell, along with FedEx, KB Homes, and we do have Lennar Homes coming out Tuesday as well. So we'll see if the housing stocks end up being weak or not. So now we come over and look at the SPY real quick. We can see down here on the MACD indicator is crossed to the downside, and we don't really have that bearish engulfing candle like we talked about with the NASDAQ. Now on the daily chart, you can see Friday was an ugly day, but we are nowhere close towards that 38% retracement, or could we potentially go 50 or even 61.8 retracement level? Now, keep in mind the 38% retracement is a minor retracement, so there still is further to potentially go. Will it be one of the news catalysts that brings the market down towards these levels, or will it be the BOJ? Let me know your thoughts in the comment section down below. Now, we come over here and we start looking at the 4-hour chart. MACD indicator also rolled over to the downside as we made a new high from the swing point over here to over here. Look at the MACD indicator. It was not making new highs, and we can clearly see from over here, look how high the MACD indicator was. Look, as we're getting back towards that area, notice how much lower the MACD indicator was at this point. On the 30-minute chart, we have that dreaded H pattern coming up, and we are well below the zero line. So we can possibly see the market trying to firm up. Now, the question is, do we overthrow Friday's low and then get back above it? Maybe even set up some type of MACD divergence. Now, Friday before we got off the live stream, notice where the market ended up bouncing from. You can see we put the low in right around 679.18, because when we come over and look at the gamma exposure levels right around that time period, you can see it's 11:30 timestamp, Windows updated. Notice right down here, we had put support coming in at 680. And I warned traders out there on the live stream. I said, if you're trying to short down at these levels, watch out. This is an area where we are likely going to get defended and try to bounce up. We even drew out some Fibonacci retracements to go ahead and highlight the move. And notice, no surprise, we came right back up towards that 50% Fibonacci retracement level. Now, as we come over real quick and we take a look at the S&P was able to take out the lows from earlier in the week, and we came right into that minus development area. Keep in mind, we still have a couple high volume nodes that need to be tested, 68.39, 68.26, and then we have that untested point of control at 67.82. Now, we come over and look at the daily volume profiles. Notice, could this potentially be a double bottom-ish type of pattern? Now, I know the second low is not technically all the way down there, but some of the ways I like to play this is just highlight the low area, candle wick to the candle body, and you can see we came right down towards that area. Now, if we can stay above the point of control at 68.91, I want to see, can the market work its way towards 69.13? And then maybe if things get crazy out there, can we come all the way back up, playing that structure breakout point anywhere from 69.49 to about 69.52. Also, something I failed to mention, when we look out here on the 4-hour chart, we have that nasty down candle right here. If we really start getting above 50% of that candle, we'll call it 69.20-ish or so. We're probably going to go all the way back up towards the top of it, which at that point would bring us right back to that same structural breakdown point that we just spoke about moments ago. Now, if you guys trade with prop firms out there and you want a way to support the channel, make sure to check out the links in the description box down below. And if you want to understand take profit traders drawdown, and more importantly, how to defeat it, then you want to make sure to watch this next video right here.